Hello and welcome back to Tackle Trading. I've got a pretty interesting little chart setup I want you to take a look at today. We're going to start out by looking at the broad market indices. Here we have a chart of the S&P index. I want to track and see how the performance of the overall market is doing. And we're trading in a really interesting area of overhead resistance. So what we're seeing here is from back in April, we've got an overhead resistance point. And we're looking at the market retesting those highs, and it's up there again today. A good way of thinking about this is the market came up to this price point and said, little pig, let me in. And the answer was not by the hair of my chinny chin chin. It tried again, little pig, let me in. And now it's currently huffing and puffing. It's trying to break above that 12.25 price point, and it hasn't been able to do it at this point in time. To put this into perspective, I'm going to drop back to a weekly time frame. And what I see here, first of all, is I see a macro cup and handle. So there's a giganto cup and a handle here. And when we see this pattern, what we're looking for is breakouts. And I do expect the market to break out. The question then becomes how high. Well, if I'm going to go ahead and break that out, one of the first things I'm going to do is look at the historical support resistance zones. And real key price points are going to come in here at old support resistance zones. That's a real significant one, and back in here, which is about where it's playing right now. So if it breaks up, let me grab my crosshair so you can see that. 1275, I'm thinking between 1250 1275 are your targets. Thinking a big fat number like 1250 first. That's the first little inkling of support zone. And then on the high end, 1275. So those would be my short-term projections. And I am expecting the market to continue to break out due to a couple things, a little QE2 stimulus and Santa Claus rally and just general stubbornness of the bulls. So I've got a great trade for you idea. It's on Lion Energy. We have a nice upward trending stock, has been upward trending for quite some time now. And we have a beautiful technical setup on an ascending triangle pattern. And this is our ascending triangle pattern. And I expect this to clear the overhead resistance, and probably as soon as tomorrow we could see a trigger above resistance. I'm going to try and trigger into the trade. And when you're looking at symmetrical triangles, a technician would typically expect that triangle to give you a nice symmetrical break. And I'm going to go ahead and draw a parallel trend line. And what you do is you draw your parallel trend line, then you drag it and you throw it out on the back end of the triangle. So what we're looking at is a symmetrical break to the upside. And I think that as price moves out, you're going to get out towards about $40, and that's about what you would expect. So a breakout from here put us about as high as 40 on the high end in the near term, and that would be a really nice gain. And you're talking about a 4-point gain. And I'd be looking to pick this up right here above the high at, let me grab my crosshairs. Triggering in just above $37 a share. I've already got the trade in my system. I currently have a buy stop limit, and my buy stop limit is at 37.03 by 37.10. So I'm going to trigger in at 37.03. I'm going to buy. And then I've put on a trailing stop loss to chase it, and I'm going to have it chase it by just over about $1. This particular stock's average true range is, I think, around 60 cents. So this stock's averaging 67 cents per day between candle highs and candle lows. And I've put the trailing stop on that $1 away. So what will happen is as it triggers into the trade, you will actually see the price as it moves up. My stop loss will end up starting down here around 36. And if price continues to rise, my trailing stop loss is going to chase that. And then I've got an order to dump 100 shares as soon as it gets to 40. So I'm entering in with 132 shares based off of a position sizing rule. And I'm going to dump the 100 of those at the target and take a profit. And if it heads the wrong way, I've got a trailing stop loss starting out at $1 below the trigger price. And it will chase it up as the price moves up. And we're looking to get a nice yield on that. And I would imagine it would probably take it around 5 to 10 days. If you look at previous swings, you can see where here's a swing that took 1, 2, 3, 4, 5, 6, 7, 8, 9 days. Here we took 1, 2, 3, 4, 5, 6, 7, 8, 9 days. So probably less than 10 days to look for that about 3-point yield is what I'm hoping for in that particular trade. Hope you found this educational, and I will see you next time.